It's time to check back in with Ripple's XRP this week after we saw the big dip that occurred last week as a result of Bitcoin. Today we're going to be performing some technical analysis and making some price predictions on where we can expect to see XRP go in the near future. Let's get into it. How's it going, guys? Ryan here and welcome back to another crypto video. We're taking another look at the XRP coin and we're going to be using relative strength index, moving averages and other technical indicators in order to make some educated decisions on where we can expect to see XRP go in the near future. But before we get into that good stuff, guys, please remember to leave a thumbs up if you do enjoy today's video, and if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. We cover crypto, stocks, investing and wealth management on this channel. I'd also love to know your thoughts on XRP and Ripple, particularly the court case as well, down in the comments section of today's video. But without any further ado, let's jump straight into today's computer and start the analysis. Welcome into the XRP chart, guys. If you're looking to buy XRP or want some free Bitcoin, there's a couple of links down in the description of today's video. But let's take a look at the chart now. And as you can see, we had that massive dip obviously in last week's video where the price absolutely tanked, and this wasn't an XRP fueled issue. This was as a result of Bitcoin, and many other cryptos obviously dropped as well. Unlike some though, unfortunately, XRP was not one of the coins which managed to bounce back, but it did not keep dropping. It's managed to stabilize and hold its ground. So first things first, I really want to put in where I think there's a bit of a flaw, I suppose, or a bit of a resistance, in the sense that we can see some, I suppose, support for the price. So sorry, let's just chuck the support in and let's just chuck in the resistance as well. So there's a bit of resistance, I really feel like, sitting at about this point, and this is a very, very narrow channel. Now obviously if we go back out, you can see plenty of price action has occurred in these channels in the past, and if we keep going out, where are we? There we go. You can see in the past, once again, this has been a massive area of price action. So we're in overall a relatively good area for support, but as a result as well, there is also plenty of resistance for us to put up with. I really believe though that where we're currently sitting right now, we are primed to, I suppose, break up or down depending on what occurs. Obviously we saw massive dips as a result of big sell-offs, but that over the past 5 days or so has dropped off significantly and the price has stabilized. You can see back on the 10th of September, we had a day where we were really trying to break out and make a move, but unfortunately we weren't able to maintain that, and we've dropped back into this little channel that we see right now. Now, one thing to keep in mind is we could potentially be in a bad situation here. And whilst yes, it's great to see the support and the resistance points forming this channel here, we could potentially have what is known as a reverse flag pattern. And how does that look, do you ask? Well, basically it looks something a little like this. So we've got our typical, flag pattern that is forming right about, there or so. And as you can see, it's upside down, which basically means it's a continuation pattern. Now, are we going to see this unfold? I'm not sure, but it is something to be wary of, because I obviously like to be real with you guys. There is the potential that we will dip below this current point of support at, $1.05 and start dropping. But until we see confirmation of such an event occur, I don't think it's going to happen. But obviously, if it were to occur, where would we be dropping to? Well, I'd suggest worst case scenario, let's take a look at history and see where typically we end up from a resistance point. I'd suggest about this 92-cent mark would be exactly where we'd be dropping to, which was the tail end of our dip previously that we bounced off. So worst case scenario, we're going back to 92 cents if this channel fails and that flag pattern unfortunately unfolds. But It's holding up for now, so that's good. Let's bring in some more indicators. Of course, I like to look at the MACD. Let's look at where the momentum's going. You can see that obviously we've been in the red for quite some time. We had that one good, nice little green day, but it has been dipping, which means it's about time we have some green, you know? And you can see, obviously, that this curve here is starting to reduce, and it's moving in the right direction. What we really need to see is what we thought was going to occur on the 6th of September, where we saw the crossover of the short term over the long term moving average. We need to see that occur again, but it needs to hold within the next week or so in this region, going in this sort of a manner. Now, will it occur? Well, the support point needs to hold up. It is really as simple as that for us. Now, moving on to something a bit more, I suppose, tangible as well, the relative strength index. I really think we're going to be moving towards the oversold area. Actually, I am dead wrong. We are sitting right in the middle. That means we can go up or we can go down as well. Obviously, we've come from the overbought section from mid-August through to now, where we're currently sitting at an RSI of 47.75 cents. But that means it can go either direction. So that's not much help to us. So in fact, it's not actually a bit more tangible for us to look at that. What we can look at though is our 3 key moving averages. So let's bring those ones out now. We've got our short-term 20-day moving average, which we'll bring in first. We've got our medium-term 50-day moving average, and these two are really going to be the main ones we're focusing on today. You can see that coming in here. And the longer-term 200-day moving average, which I'll just put in for interest's sake. Now, a couple of interesting things to know. Obviously, the 200-day moving average is now acting as a key point of support, and it's come back above that fallback point. So very, very strong for us if the support here at $1.05 does fail. Secondly, the reason $1.05 is looking a lot stronger now is because the 50-day moving average is sitting right smack bang on that as well. 50-day MA is literally $1.05. So I think if that manages to hold up, we are doing relatively well. What will be interesting though is if we break through the resistance here at $1.11, $1.12, we will then have to break through the resistance of the 20-day moving average. We are unfortunately below that point now, so that means this acts as a major resistance point for us. And I suppose we can really illustrate this by putting a bit of a line in right here, indicating exactly where I think the key point of resistance is. It's actually just higher than I'd suggest the current 20-day moving average. It's sitting at about $1.18. So the 20-day moving average is $1.16. It's obviously gonna, I suppose, start dipping given that all the price action over the past week is under where it currently is sitting. But this $1.18 point is where we need to get through. So there's lots of key areas within, I suppose, a relatively short distance at the moment in this sort of fashion. So obviously we're going to have to really wait and see. We're in a position where we could break up or we could break down. So it's the volume that's really going to tell the story here. And is it going to be buying volume or is it going to be selling volume? If the overall market starts to pick up, which potentially does look like it actually is, and it's recovering quite quickly from this big dip on the day here, I think we're off. So that leaves us to what is the target for today's video? Well, the target for today's video is going to be a relatively simple one. It is to break through this key point at $1.11 in order to solidify our position as still trending in a relatively upwards manner and taking us out of the danger zone that we're currently in this trading channel. We really don't want to see the price dipping below that 50-day moving average at all. So $1.11 will be the target for today, but do be cautious. We want to wait for a confirmation to see that this is going to occur. I'd love to know your thoughts on today's analysis down in the comments section below. Do you think we're going to manage to break through that key point of resistance, Or do you think that 50-day moving average is going to fail and we're dropping to that next point of support? Let us know down in the comments section below. But of course, if you did enjoy today's video, remember to leave a thumbs up, and if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. We cover crypto, stocks, investing and wealth management. But I'm going to leave it there for the day, guys. I hope you have an awesome day. I'll see you next time. Cheers.